Hey guys, and welcome back to my channel. So this video I'm just going to be going over the trades I took for the week that just went by, and yeah, let's get into it. So first trade was a euro dollar trade. So it's pretty simple. We have a bullish shooting star followed by a bullish engulf, so I took that as an entry for my take profit at this resistance zone over here, and put my stop loss slightly below where there seems to be support, because if you look over here, price closed over here and then price closed over here again, and then price, there's a lot of things going on here. And then if you look over here as well, you can see there's wicks over here in this area, so that looks like a decent support zone, so that's why I placed my stop loss there. Price spike, and yeah, nothing to it, just a simple continuation of trend. And honestly, it looks like it's a higher lows type of thing, because we have over here boom boom boom, higher highs, higher lows, and now it seems like we're on the uptrend again. So if anything, I'm just probably gonna wait till this resistance zone gets broken before I enter another one. Next trade was pound dollar. So same thing as euro dollar, bullish engulf followed by bullish hammer. Took that as a continuation of trend and an entry. Entered, and honestly, as you can see, price got close to hitting my TP, and I just thought, you know what, it's not that far off my TP. I'm gonna just hold it and then wait for it to hit my TP, because I like seeing on the platform says take profit and not market, because when it says market, that means I close it, but when it says take profit, it means price went into where I thought it was gonna go. So yeah, that's just me being greedy, and as you can see, I paid the price for it because price started to tank and I closed in a loss. Plus, the reason why I put my take profit over there is because you have the wicks over here being hit multiple times, and then over here as well. And then stop loss wise, you can see there's a bunch of support over here in this area, over here, over here, over here, over here as well. So yeah, that's why I use those price points. So next trade is going to be gold. I actually had 3 different entries for gold. So the first 2 entries were for this day, this one right here. So it's pretty much the same thing as a euro dollar, bullish hammer followed by a big bullish engulf. Took that as confirmation of trend. Put that TP where the all-time high was over here, these two, and then put the stop loss over here, because here we have a bunch of resistance over here. So the next logical place would be over here, which is where I put to avoid being hit in this zone. So anyways, I'm gonna zoom in so you guys can see price literally got an inch away from my take profit. And for those 2 trades, I was like $20 away from hitting my take profit, instead of me just closing the trade, because I wanted to take a screenshot of it. And there's this saying that if it's good enough to screenshot, it's good enough to close. I didn't close the trade because I wanted to be greedy and have the trade hit my TP. Ended up paying the price for it because price literally retraced. But before I even get into that, at the time when my trades were in profit, I entered another one because it seemed like we were on the bullish momentum. So I entered the next day. For my TP, I used the pivotal point standard, and then for my SL, I just put it slightly below the entry of the previous trade. And that trade pretty much just bombed. Price literally tanked and hit my stop loss, and I got taken out. I think I closed like pretty much just a couple of price points away from stop loss, which at that point is pointless because it's still in a loss anyways. And then the previous one that was in profit and a good amount of profit started to retrace, and all 3 trades ended up in a loss because I wanted to be greedy. Next one is silver. So same setup kind of, so bullish engulf followed by another bullish engulf slash hammer situation. Entered, and then we had a doji following day, so I'm already on the fence, like, oh man, this is gonna be another one. And then we had a bearish hammer, and in my eyes this looks like an evening star. Although it's not a full one, I'm gonna put a picture of what an evening star is and a definition. But pretty much it's like a bearish, like trend reversal at the top of a bullish trend, or at some point of a bullish trend. So when that happens, it usually means that a reversal might be coming. So I saw that and I was just like, you know what, I'm gonna just start thinking about closing. So I thought about it, and then I held it on a Friday because I was like, you know what, the confirmation of the evening star is not there yet, so maybe by reverse, bad idea Friday morning, wake up, I was down even more, so I just closed, and yeah, pretty much Friday it just tanked and hit my stop loss. It didn't hit my stop loss, but I closed it Friday morning, and then it tanked, and then you can see what it ended up. And the last trade was dollar cash sell. So this one's actually pretty simple. 3 black crow price action. So that's an entry and a confirmation of trend. And then enter, put my stop loss right close to the support zone, and then put my TP where the new resistance zone is, because if you zoom out, you can see that price. If you zoom out, you can see that price loves that range over here. So you can see a bunch of price action going on over there, over here, a bunch of wicks, over here, a bunch of wicks, a bunch of price points being tested. So I put that as my take profit, and as you can see, price pretty much retraced and went the opposite way. I don't think it hit my stop loss. I think I ended up closing before it got close, before it did hit it. But either way, it was like so close to hitting my stop loss that I didn't really see that much anyways. Also, the thing I didn't realize was that I should have waited for price to close beneath the new resistance zone, because if you look back here, price tanked there and then retraced. Tanked again, then retraced. So I should have waited for confirmation that, oh, we might be going to the downside. But I didn't. Again, it's just like little stuff, because other than that, the entry seems pretty fine, because we had a double top on a double top price action over here, which is a bullish reversal, or meaning that price might start selling. So yeah. And also, if you use a trend line, you can see that price pretty much respecting the trend. So if we do end up retracing again, it might hit that same spot again. So who knows? Because right now it also seems like we have a triple bottom, which is a bullish indicator. So yeah, there's a lot going on. Just little details that I wasn't putting too much attention in, but again, it is what it is. We move forward. So thank you guys for watching. Leave a like, subscribe if you like what you see, any comments, input, discussions you guys want to have, and I'll see you next time.